Good morning, guys and gals. Today I'm going to go over failure to act and being a cheapskate. This video is mainly just for me because if I don't have those two failures, I will be a better trader, right? I will be upsizing my account without those two failures. So anyway, let me go into the disclaimer real quick. I'm focusing on options market right now. And there's a lot of risk with the options market, and there's a lot of reward also with that risk, right? So if you are trading on the right side in the options market, you'll be making buttloads of money. But if you are trading on the wrong side, you would be seeing your account go or your initial investment going down 50%, 75%, or getting wiped out easily, right? So let's go into it. There are two names I want to mention is MicroStrategy and Shopify. We're going to go over those. Hopefully we can get in and out in 10 minutes, but if it's more than that, it's going to be maximum 15 minutes. Hopefully we can wrap it up in 10 minutes. I was watching this one. I wasn't watching this one going up because this one didn't come into my strategy or anything like that. So if I were in the name, if I was watching, I would be wanting to be over here anywhere along this lines, and then coming on an uptrend like this would be great for options market. So I saw this one coming down on Finviz.com, 25%, right? One day drop, 25%, largest percent drop ever, right? So from it was dropping from 13, 15, in the pre-market from 12 all the way down to 950. So if we were in the buying puts, we will be making a lot of money over here, right? But I'm not in the I don't have any interest in buying puts unless I'm day trading, and I don't want to day trade anymore. So there's a lot of risk day trading, losing kind of losing my focus. So I'm gonna focus on swing only and just mainly focus on my trading plan. So over here, but let's just say if I didn't have a failure to act and being a cheapskate, I could get in here and pay for it, 950 or even 970. So 970 strike call over here, and if I can get in the action over here for 8,000, 9,000, or even 9,000, 10,000 over here, which could be right over here, right? Buying one contract only, while it's so risky, though, right? Because 9,000, if it rolls down towards the end of the or next day, you'll be wiping it out, right? So, but it came up in the morning. 11:31, so I could be making money for what, 15,000 or 16,000, almost doubling that amount, right? So 9,000, almost doubling that amount if I sold it in the morning. So I was watching this one, but I was like, it's sort of kind of risky because usually I would be looking out for another day of drop here. It didn't do that, so I kept on watching, right? And this one over here came into the trading plan, but the thing is that failure to act kicked in, and I didn't create any position down here. I was just watching this one coming up today too, so I'm like, what am I doing, right? So if we were to look at the 20-day chart and we can find our support over here, people were bouncing off of 950 already, right? But if it ever falls below that level, we can take a look at 850 and below, right? So if we look at the 5-minute chart, it broke down. This one coming down one day low, and then next day is lower. We can actually create position down here, sold it in the morning for a greater return right here. And so this one also coming from high to low, one day low, and we can come in on the second day low here, right? If we can take a look at that coming in here, I saw my entry points. I'm being a cheapskate here. Because I'm like, why couldn't it go to 850? 850 would have been a very nice support, and I could go in and bet on it. But anyway, I sort of kind of watched this one coming up right here, and I was like, okay, this could be a good entry point here or a good entry point here. So it presented itself two entry points for me. And if we correlate that into the options market, we can actually see where that pricing would have been. Let me see if I can take a look at this. Yeah, it would have been over here. Let's see. So over here is what I would have paid for which is $14,000, right? And if I sold it right off the bat, I could be in the money for, no wait, because the price is a little different. So I wouldn't be in this this strike right here. I'm sorry. Ooh. So 8, it would be 900. At 900, I would be paying for it right around 31, which is 3,000, or getting a little higher, which is 38. So say for example, I got in at 38, and I could sell it right off the bat for 60. So that's almost doubling the money, right? And if I hold it out in the morning, I know it was coming down because a lot of jobless claims over here, and market was just down. But then we got a rebound right there at 960, and so 960 correlates to be 53 because it's on a next day. So the contract is worth a little less. So it would have been ideal if we sold it over here at 60, 38 to 60, almost twice the money. And so that's what I missed out on, is that I was waiting for it to go a little cheaper, which is support level ideally 850, but it's not happening, right? It's not happening. So if for example, if I hold this one, right, I got in for 38, and today it seems like it's on a continuation chart pattern, and usually I don't trade that way, but it seems to go into a continuation chart pattern, and it's going a little higher. And the news is that they are closing the offering, and they are gaining some money already. So a lot of people are coming here, bet it up. And I saw my entry point over here also, right? And I saw it, but I didn't come in. I was being such a cheapskate, right? I saw this one coming down. I was like, okay, is this going to be a red day today? But then all of a sudden it came right up. See all this gap right here? I couldn't even get in. I was like, oh, holy crap. It's getting away from me. But then I started drawing a Fibonacci retracement, and I saw this one. Oh, wait. I want a retracement, which is here. And I even put in a 50% arrow here. And what I failed to do is that I failed to create a position when it ran down like this. And I could get into action over here. And for example, getting action on that one would have been ideal because even though I'm letting this one go away, paying a little higher, I would still be in the money if I could pay for it at 38 again, right? And then it's rolling all the way to 1,000. And do you know what that means in the stock, in the options market, where yeah, the peak was, wow, 102. So $10,000, right? So 3,000 netting $10,000. You see that? I totally missed my entry point. I was like, I don't know what got into me. I didn't want to create a position down here, and I'm like, I'm missing out already because this one broke out. And even if I got in here sort of kind of high, that's a little higher than the middle VWAP. Ideally, I want to stay below the middle VWAP right there, right? And so, yeah. $3,800 is what I could have put in, and instantly on this day I could be making at the high right here 1,000 is 99 to 102. I could sell it for that much, and so I failed to act. First of all, I failed to act over here, even all that Fibonacci retracement and putting an arrow there and say, hey, this is a good entry point here if it's 50% and above. It seems like it's 50% and above. Well, I could probably enter right here a little higher than that, which would have been 48 still. Getting 10,000 out of the 48, which is $4,800, is not too bad, right? It's like more than 100%. And that's one of the failures that I get in and I can stumble upon very, very, very regularly, right? So if I could get rid of those failures and just kind of jump in right here for 3,000, even though it's expiring today, I could just get out, day trade, get out when it's on the high peak here. Either get out on the first peak or the second peak here would have been ideal too. 70, 74, and 100. 10,000. So it's great. It's great. Anyway, I failed to do that one, and then we'll go into Shopify. Shopify, I missed out so much. It's almost the same thing, same thing. So let me go into the 20-day chart and sort of kind of take a look where the support and resistance is. Okay, the high is $1,500, right? So this 1-day drop is profit taking. Take a look at this. Earning is an earnings beat, right? Look at that. Look at that. Estimate is 0.5, and then they're making $1.58. So people are selling off right here because it's at the high and they want to get out, taking profit or whatever. And then I saw this one. I was like, first day drop. I don't want to do anything. But then it was going on an incline angle right here, and it crossed and it came up here. And I actually could see my account if I can enter right here. I know it's sort of kind of too late, and it's sort of kind of very, very, very expensive if I get in over there at that time. But then, man, I'm like, what am I doing, right? What am I doing? I'm doing all the wrong things. Let me go into the pricing real quick. At this point, if I can get in here, it's 13. Let's just say 13.50. All right, paying a little too much for it in the money. But take a look at this. Take a look at this. Okay, if I was in here, I would be paying $3,400, right? A little higher would be $4,000. If I paid $4,000, take a look at this. It turns into $10,000 at the peak. And if I get out at the very first peak, I would still be banking $2,000 in the money. So usually I get out in the first peak, but then if you hold out for the second peak here, which is the highest peak, you'll be making a buttloads of money. So if I put in, if I usually don't upsize on options market. If I do one contract, that's where I stay at. But imagine if I know there's going to be a breakout today, that day, even though it's not getting in within my trading plan. If I can get in for one contract, sort of kind of take a risk, and I see all this buying pressure coming up here, I totally miss out this entry point. I was like, what am I doing? Why didn't I enter? I see the squeeze and this one coming up. I mean, why wouldn't I want to be in there, right? I could get in here for 14, so a little higher than that, so which is $6,000. $6,000 still good to go because it kept on going all the way back here to 14.50. You see that amount of change? That's almost $100, and $100 equals, wow, a lot of money. Say $4,000 coming to $10,000, right? Giving off at the end of the day. So I could be in the money if I don't have this fear of failure to act and being a cheapskate. I'm trying to see if there's any lower than that on the next day within my trading plan. Then would be great. But I also miss out on over here too. So on my entry point over here, I draw all this arrows and stuff like that. It kept on going. You know what I'm saying? Right here. 1380 would have been, where are we at? The low is 10, so I could get in here for 12 or even 18 or 19, which is 1,900. 1,900 getting out over here is what? 5,000, or on the second peak right here is 4,000. So I totally miss out because what? I'm being a cheapskate. All right, I'm being a cheapskate, and I don't trade on the continuation chart pattern, and I am doing failure to act. I see this entry points. I didn't enter. I don't know why. I know it's just shooting up like this, but then you can still enter on the options market. You pay a little bit higher, but then hey, I see this coming up, draw a Fibonacci retracement, and put my entry point over here. Still failed to act. Even though when it got away from here, you can still find your entry point over here a little higher, but then you can still sell, hold it out, sell, and be making buttloads of money. Even though market is giving back everything right today because it's Friday, it's okay. You're trying to find your peak, get in and get out. day trade on Friday expiration, right? All right, that's it for me. Have